Well, don't look now, folks, but this pressure, this continued pressure on big tech continues to roil the broader market and all these rally attempts that we've seen in the last couple of weeks. Now, many say this, though, we're at the moment of truth, and that if you look at the NASDAQ 100, it's key that it holds above the 100-day moving average. Now, I think most of the names that are long, that we're talking about here are long-term buy and holds, but there are some high beta names, right? These are names that outperform the market. You know, they go up more or down more. And certainly if we break down more, we could see a big air pocket. So is this the moment of truth? I want to bring in disruptive tech research founder Lou Basenese. And Lou, the 100-day, it's been amazing, right? It held last November, held March, it held in May. Every time it held, it was a heck of a buying opportunity. What about now?
Look, everyone's freaking out. I'm relaxing. I'm pulling out the lawn chairs, having a few brews with my buddy Dave while everyone freaks out and buying this dip. The 100-day moving average is really a false narrative. I think the 200 moving day matters more, and we're still about 3 or 4% off that. That's a good support level. But more than anything, it's tech earnings that matter. And we're about 2 weeks away from getting those first reports from the sector. That's what's going to drive share prices. It's always what drives share prices. Earnings, you know, quarter over quarter, if the earnings are growing and they're going to come in better than expected, we're going to see the NASDAQ resume its rally mode. So I think that's the biggest focus. I would, to your point, though, say there are some very vulnerable names out there. I'm looking at 3 in particular. Zoom Communications is doomed. The Zoom fatigue is real. That stock needs to be cut in half again from its COVID highs. Coinbase, they've got a customer service and hacking problem on their hands. I broke a story 3 months ago about a couple that lost $700,000 in coins to hackers. Yeah, you know, there's a lot there. And then Peloton. I think those 3 names alone should come in another 50% and crash land. Forget about an air pocket.
And by the way, I'm with you. I like the 50 and 200-day moving average. So what about this, connecting the dots, right? So we got the conventional wisdom is that inflation is higher, so buying yields are higher. The Fed's going to hike rates. You go to value and ditch growth. You know, do you pay attention to that at all?
I mean, I pay attention because we have to. Everyone's fascinated with the discounted cash flow model, and interest rates are the major input in there. My thing is, to sidestep the Fed taper nonsense, you got to look to the highest growth, highest margin sectors that are most important to the future of the world, and that's semiconductors. I mean, we've talked about that time and time again. So big names like NVIDIA, smaller cap names like Atomera that I've talked about before, those are companies that really are immune to whatever the Fed's doing. Their business is going to keep chugging along no matter how fast the taper happens, no matter how fast interest rates rise.
I got 30 seconds, Lou. Apple's in something of a tailspin. It hit 156 just a month ago. What's going to turn this ship around?
You buying an iPhone. That's it. That's all it takes, man. So, no, look, we've been to this Apple horror show turned into a holiday party. We need results. Everyone thinks the September event was underwhelming. Wait till we get the results on October 29th that shows higher ASPs because of the 13 Pro, higher demand for the Apple 7 watch, and just building momentum into the holiday shopping season where all you can buy because of supply shortages are going to be Apple products.
All right. Hey, Lou, it's always great having these conversations with you, and I think the audience always learns something. I know I can speak for myself and say that I do, but I'm not going to get the iPhone because I'm old.
Fair enough. I'll keep trying, though.
All right, thanks. I appreciate it.